you know I am always on the hunt for the next bull market. And right now, there is a raging bull in the life sciences space, in particular the life science instrument makers. They've caught fire here, especially the largest players in the group, Thermo Fisher and Danaher. So we've got to ask ourselves, what's driving this move? And more importantly, can it maintain its momentum? Some of this has to do with the rotation. When Wall Street starts worrying about a slowing economy, money managers naturally gravitate into the stocks of consistent companies that can keep putting up strong numbers even in a recession. That's the life sciences industry in a nutshell. And it's why these stocks have taken off in recent weeks. The thing is, rotations go both ways. If the Fed decides to breathe new life in the economy next week by cutting interest rates, well, these same recession-proof stocks, they could sell off. But that's not necessarily a bad thing for you. Thermo Fisher and Danaher have exploded higher here, and I think they're absolutely worth buying. And if you get a pullback off the Fed, wow, do it. Why? Because while the stocks are benefiting from rotation right now, there's more to this story than that. These are two incredibly well-run, fantastic management companies that are firing on all cylinders, which makes them incredibly good long-term investments. Let me walk you through them. I'm going to start with TMO, Thermo Fisher. This is up 28% year to date. Here's a company that makes all sorts of advanced medical equipment. Now, I always describe them as an arms dealer to pharma and biotech. And by the way, the company never seems to mind that I call them that. Now, this industry's got a lot going for it at the moment. As Barron's pointed out in a terrific piece at the beginning of the year, life science is one of the few sectors that still enjoys broad bipartisan support in Washington. Science funding is being cut all over the place, but the National Institutes of Health actually boosted their life science budget by 5% this year, at a time when the managed care stocks and the drug stocks have become political footballs, which is a nice way of saying it. Everyone on Wall Street is worried about the impact of single payer if a Democrat other than Joe Biden wins the nomination. The life science stocks, well, they let you sleep at night. Meanwhile, pharma and biotech companies spend fortunes to buy tools that will help them with research and development because obviously they need new drugs. Keep that pipeline going. But they're not just in the right place at the right time. While Thermo Fisher is an enormous, I can't believe that it's gotten to this $114 billion company with exposure to a ton of different businesses. They have a long history of actively managing the portfolio. For example, in late January, the company sold this anatomical pathology division, where they make microscope slides. They didn't want to be in that anymore for $1.14 billion. This was a more commoditized business, which is why management wanted to move away from it. Margins going lower there. 2 months later, Thermo Fisher told us it was acquiring Cramer Bio for $1.7 billion. Now, this is a much more proprietary, more specialized business. Cramer Bio is a viral vector contract development and manufacturing play, and management expects the deal to be additive to earnings within the first full year of ownership. They closed on it about a month and a half ago. Now, neither of these moves, I know, are big enough to make a huge difference, but they illustrate Thermo Fisher's priorities. The company's betting heavily on its most lucrative end markets, like individualized medicine. That's what all these little biotechs are about. Biopharmaceutical services. Now, when we spoke to Cramer Fave CEO Mark Casper in March, he was very optimistic about the opportunities in precision medicine.
So we have a really exciting portfolio of products that come out of that very large R&D investment. One area that we're excited in is precision medicine, and our sequencers have done really well in helping doctors identify the right therapy for an individual specific type of cancer. So that's an area that's really been a focus for us.
That guy is money. I like him so much. So Thermo Fisher makes lots of little acquisitions in red-hot areas. Then it accelerates the growth and scales up the businesses once they're under the TMO umbrella. And that's how these guys have been able to put numbers up, fantastic numbers, time and again. Coming this year, Thermo Fisher had a high single-digit organic growth rate, and they've been able to maintain that. Then at its analyst day a couple of weeks ago, management raised its long-term organic growth forecast for 2020 to 2022. They're predicting mid to high single-digit numbers for the foreseeable future. What a horse. All right, some of the bears are saying it's a fly in an ointment here. They get about 10% of their sales from China. However, as Casper told us in March, the company's machines are so valuable that they're in a position to dictate terms to the Chinese. Nobody's fretting about what the trade war means for the life science industry. And I do believe, by the way, for the record, that the Chinese are behind us in this. I know everyone thinks the Chinese are ahead of us in everything. No. Okay, right now the stock trades at 21 times next year's earnings. That's actually not bad. It's reasonable. I'd like to see it obviously at lower levels to tell you to go buy it, but anything can happen to give the economy a boost. You'll get that chance. Thermo Fisher will likely be a victim of rotation out of the safety stocks into more cyclical stocks, so I buy some here and then be ready to buy some more at lower levels. That's right, I'm greenlighting a buy here tomorrow. How about Danaher, DHR? If Thermo Fisher's succeeding in part because it's aggressively pivoted into the biopharma space, you got to wonder what that means for Danaher, the healthcare technology conglomerate it's just buying GE's biopharma unit for $21.4 billion in cash. By the way, they did it secondary, and the stock went right up after the secondary. It was a fabulous opportunity. I like this situation. Danaher has a great track record when it comes to making acquisitions, and I'm betting this one will be just like all the other terrific deals they've done. They have a whole system that lets them turn good businesses into great ones. That's one reason the stock's up a staggering 35% for the year. I think Danaher could have even more upside. But again, how about buy some here and then wait for the pullback? And look, it's not just the big boys. There have been tons of smaller winners in the life science space. I mean, that's why I want to give you a kind of a stealth play on the industry. So how about this one? Avantor. Have you seen this? It's a chemical company. It just came public on May 17th. Oh, I love this kind of stock. The IPO priced at 14. Stock didn't generate much excitement. Opened at $14.50. By now, though, it's rallied to $18 and change. And I bet it's got more room to run. I loved all the analyst recommendations this week. Why? Because the quiet period ended. And you know what? I think there's even more people who want to come out with bullish coverage. This may be a chemical company, but it is a chemical company that supplies the life science industry. I think it's worth having on your radar. Candidly, it was boring. I got up, I was reading at 3:30 in the morning, and I did think, boy, I should go back to sleep. But I shook it off. Here's the bottom line. The life science stocks have caught fire, and while some of that has to do with rotation, what's really going on here is Thermo Fisher and Danaher are both incredibly well-run companies that are kind of in the sweet spot right now. I think you can buy some here, you buy some more lower, and yes, they are that good that I am recommending them even after these incredible outsized moves higher. Georgia and Florida? Or Florida and Georgia? Georgia?
Hi, Jim.
Georgia, great to have you geographically on our show. What's up?
Hey, Jim, it's about my favorite stock, Exact Science.
Okay.
I just bought it for the third time about a month and a half ago. I can't believe how much it is climbing. Have you heard any good news on it or anything?
Yeah, the health insurers are all going for it. Now, that was something when Kevin Conroy first came on was not clear. Now it is clear. It is very clear. And this thing may not even be done going higher. I hope that Kevin comes out with some more things for some more different illnesses. He's terrific. All right, people keep betting against him. That so far has been a fool's game, may I say. The life science stocks have caught fire. Thermo Fisher and Danaher are buys, some here and some lower. And Mad Money is back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.